If I told you I made 770% and 1100% on 2 trades in the financial markets using options, would you believe me? If I showed you how it's done, do you have any other option but to believe me? Well, in this video, I show the makings of a typical short trade idea. Our mentees get the opportunity to see me dissect a past trade and in the process get a very thorough understanding of what makes a very good short trade idea. Stick around till the rest of the video. Who knows, maybe one day you'll be making returns like these as well. If you would like to see more such videos about creating your own pool of opportunities in financial markets, do like and subscribe to the channel. Leave me a comment below to let me know if you've learned something from the video. Give me an idea of what else you'd like me to cover and I'll oblige. One last thing, if you would like to learn more about trading financial markets, there's a link below. Click it to join the Financial Traders Hub for free. Enjoy the video. This is not financial advice. This is purely for educational basis. So make sure you read the disclaimer. The story I was talking about was somewhere here. So it was early 2022. So as a trader, you're in January 2022, and then you're looking at this. So the purple, the blue line is basically projected revenue growth. You can see that's moving well in line, and it's kind of a step increase every quarter, right? However, as you come into the later part of 2021, you can see the revenue growth, the steps are becoming smaller in size. This means revenue growth is decreasing. So the stock at this point in time was trading around, I think the PE was something around 90, if I'm not mistaken, 70 or 90. So definitely priced for high growth of earnings and revenue, right? So as revenue growth is slowing down here, the share price is not necessarily selling off, right? It's still around all-time highs. So if you look at it, it's got one high here, another high here, another one here, and it's not been able to go higher. I mean, it kind of breaks it here, right? But then it comes back down again. And you see, it just lingers around here. So it's not making a new high for a long time, right? It's not breaking out like over here, where it's breaking out conclusively and making new highs, right? So we have a situation here, particularly in this space, and this is like 6 months, right? If you think about it, this is around 6 months, where the stock is literally trading sideways. So if you were to look at it in 2022, you'd say this is a stock that's gone up exponentially, similar to what we are seeing in Kava, right? So what's happening here is investors are now taking note of the slowing revenue growth, and a large part of the institutional world is basically selling out of the stock. But the share price is not decreasing yet, right? So as a trader, you look at this and you're like, okay, what I can see is the stock market is definitely showing that something has changed in the stock, right? It's no longer going exponential. Then you start looking at the business, which I'll show in a little bit. Or maybe let's get into that. So the reason the share price does not fall significantly, even if revenue growth is slowing down, is because earnings growth is still very significant, right? If you look at the purple line, it's trending up quite significantly. So investors are looking at this and maybe selling out of it. Others are maybe giving benefit of doubt and saying, okay, revenue growth is just around the corner. We don't really care too much about it because earnings are still growing quite significantly. So we're happy with the situation. But one thing to note
What's
is...
driving the EPS growth here?
Sorry, say again?
What was driving the EPS growth here if it's not coming from revenue?
So it's basically reducing costs. It's the operational leverage of the company. So what happens is this company operates more as a franchise as opposed to operating its own restaurants. It has both segments, but the largest segment is the franchise operation. So being a franchise, you don't have as much capital expenses, like it's capital light. So there's a lot of operational leverage, right? As you ramp up more restaurants, you're able to generate higher margins and you're able to generate higher revenue, which lead to higher margins and eventually increasing EPS, right?
Okay.
So everything was kind of looking out good for this company, and a large part of the investment community are still happy to own it. So maybe even looking to buy here, hoping they're getting a good deal. So now let's look at what was actually happening in terms of the earnings itself. So if you look around this time, particularly later part of 2021, green dot means it beats expectation. Beats or meets expectation. Red dot is missing expectations. So this, we're looking at revenue at the moment. It's not beating by a lot. You'll see like it's surprising on the upside by 1%. And then in November, it misses by 12%. But the share price does not necessarily correct a lot. If you see here, it's got a minor correction, but it's still trading sideways. And then what you'll see over the next 3 quarters, so you remember you're standing around here, right? January 2021. And then there are 3 quarters where it will miss revenue estimates by quite a bit. Like over here it was 2%, 11%, and then eventually another 2% before it got back into, you know, its revenue growth trajectory. So you're standing at January 2021, and now if we look at on the earnings side, again, same story, right? It's beating, everyone's happy. And then in November, that kind of was the month where it was a little bit of an awakening moment, but not everyone reacted right away. They were kind of waiting for another confirmation signal. So wait for another quarter, and then you started to see the share price drop. That's from a company perspective. The other thing we also have to look at is from a macro perspective. So I did mention that at the time, I think the share was trading at forward P of maybe 70, 80. And in November 2021, we all know that the Fed started increasing interest rates, right? So not something that's positive for companies that have high PEs. So you would need to be able to justify your high PEs a lot more as interest rates go up. And then just on this basis, we're not going to go short the company, right? It's a bit of a weak case to just say, yeah, but look, the share price is moving sideways, so we need to short the company. That's not how it works. What we need to understand is from January onwards, what would be the catalyst? So on the macro perspective, we definitely have weakness. So we know that the general trend would be for high PE companies to sell off unless they're able to justify their valuations. In the case of Wingstop, what happened was revenue growth was decreasing. It's not gone to zero. It just means it went from, let's say, 30 to 20%, and EPS growth was also stalling in that same manner. But what got me to pull the trigger was that around that time there was an epidemic with chicken, like an aviary illness that came out in the US, and by virtue of that, the chicken prices went up. So if anyone knows Wingstop, basically what they do is sell fried chicken, right? So as a franchisor, it supplies the raw materials to its franchisee stores. So if the price of chicken goes up, the one who bears the cost would be first and foremost Wingstop as the franchisor, right? So everything that was priced into the stock in terms of revenue growth, earnings growth, just goes out of the window because now the margins will suffer, right? And it's not that you're sitting on the sidelines waiting for an epidemic or anything of that nature to happen. You had a confluence of this epidemic, but also at the same time, inflation was creeping up in the US. So the combination of these two factors, if you thought long and hard about it, you knew that Wingstop would not be able to generate the same types of margins as in the past. And if the business was slowing down a little bit more than what people had anticipated, because it's a stock that's priced for perfection, you have an amazing setup for a short, right? So if you look here in around February, March, April, the EPS growth actually goes down quite a bit, and the stock price just falls from something like 150 all the way to 70. So 50% drop, right? And all of that happens within a 6 month or even 5 months time frame. And that was in a stock that was literally just going exponential, like just going parabolic. So that's a situation that I've actually played it in 2 quarters. So first one was end of January till probably April. And then the second one was until, I think, end of May. I think till date, that's the trade that's made me the most in terms of ROI. If I'm not mistaken, it was around 1100%. And that's particularly because I'm trading it through options. And the move is so violent. Like every single day you come into the market and it's just red. People are just selling the stock. And as a short, you know you've nailed down the thesis. There's nothing much for you to do. And you're just looking at this and you're like, no, it will fall a lot more, a lot more, a lot more. And eventually, once you reach your expiry, you're like, okay, this is not done. I think it will fall even more. And then you set up a second leg. So the first leg was probably 700% for me. Then the second leg was like 1100%. So think about it, like one piece of research. I've written a document about this. I can share it with the guys in the Discord server. It's dated and everything, so I'm not making this thing up in hindsight. So one piece of research gets you 2 trades that just earn phenomenal ROI. Now moving back to how is this even relevant for us, right? We can look at Wingstop now and say, okay, look at the price action. Are we not seeing a little bit of a sideways motion as we were seeing sometime in 2021, right? This is basically what I was looking at. This is basically what I'm staring at in January 2021, right? This is probably where I'm looking, yeah? So my job is literally to guess what's going to happen next. And this is the part that I literally played. While everyone had lofty projections for the stock and they thought, yeah, it's just going to go much higher. If we go back to Wingstop at today's price, right, it's at 360. Back then it was like 150. But why is it trading at 360? Well, it's been able to grow its earnings a lot more in that period of time. I want to look at the quarterly results. First thing that I want to see is the earnings growth, right? Revenue increased by 45%. That's amazing. And then in terms of net income growth, it was in the range of 70%, right? So these are all like very high numbers. In terms of same store growth, you can see they're achieving phenomenal numbers. So, to be a short here, you would need to be, quite confident about what you're doing. The question now for us now is has the stock peaked? So it's made two highs. It doesn't look like we have people who will take this even higher. So maybe we have a lot of people on the sidelines waiting to see whether the weakness that's appearing in the restaurant industry, whether that will impact Wingstop or not. So they're on the sidelines, or maybe they've even started to short it. We have earnings in 3 days. I'm on the sideline here. I'm not doing anything. I'm not shorting it yet because last quarter's revenue and earnings growth were phenomenal. So I don't have enough catalysts as of now to disprove their growth story. But the market is clearly sending a signal here, right? You can see that for at least 3 quarters, it's gone nowhere. It's moved from 350 to 430, and then it's come back down to 360. So 3 quarters of doing nothing, that's 9 months of doing nothing. That tells me that there's a lot of institutional people who are selling. It's what we call distribution in the industry. At the moment, I cannot see whether there's anyone who will come in and buy this stock and get it to even higher levels. It's trading on a PE of around 80, if I'm not mistaken. So it definitely has to justify its growth. The question you have to ask yourself is, this environment is quite different now. Interest rates are falling or have fallen. So what does it mean for the stock at this point in time, right? Do we have another situation that could unfold like we saw in 2022? Probably not. This is where you will have to figure it out and try to find the pieces that could set up the stock for that kind of weakness. At the moment, I would be a short around 400, but not here. I've contemplated shorting it a few times around 410, but I could never really justify it fundamentally. A large part of my contemplation was basically my gut instincts, and I never wanted to act on it, right? So I'm still leaving it as is now, and I'm just gonna watch it from the sidelines and see where this goes. Because let's say it has next week it has a weak earnings, this could literally correct, let's say 10-20% or even more in the next few weeks. So it's not necessarily that we are late to the party here. We're just being patient, waiting for all the catalysts to unfold and fall in line beautifully for us. That's Wingstop for me. Let me go back to the presentation and see what else we could look at. Let's look at Kava, for example. So if we look at Kava, it's like Heda has mentioned, it's showing us this parabolic move, right? Do we want to get it in its way? I don't know. I wanted to get in its way around, I think, here, right? It did, actually around here. So I thought this particular quarter's earnings would be weak, but it somehow managed to go even higher. So I wanted to be a short around 95, I think. It did not work out. I did not have it in my portfolio. So now it's trading at around 135. As a short, I think this would be an even more beautiful setup. But I will need to have the right catalysts to unfold, because this could easily go to 250 and 300, and there's nothing you can do, right? So you really need to find these factors that contribute to a short thesis. Otherwise, just watch it from the sidelines and wait for things to develop that's starting to show you that the market itself is taking into account that the business is slowing down and that the next leg will very likely be down.